Okay, it's time now to get an update on business news, and for that I'm joined by Yuka Roye. Hi, Yuka. Now, China's economic recovery from the pandemic has been very strong. The month of April saw another strong month of growth in trade. Tell us more about that.
Well, China saw a fourth straight month of double-digit growth in both exports as well as imports, as demand increased both at home and abroad. Now, despite a lingering tariff war, exports to the United States were 30% higher than the same month last year. Trade surplus with the country widened, potentially exacerbating tensions between the world's two largest economies. Emerald Maxwell reports.
As the global economy bounces back from the COVID crisis, China's global exports rose over 32% from April 2020, while imports increased some 43%. The impressive figures are mostly down to last year's very low base of comparison owing to the pandemic, and are also inflated by the rise in global prices for iron ore and other commodities. But they still show that China's consumers are getting back to their daily lives, and that the rest of the world has recovered its appetite for Chinese manufactured products, with demand growing for masks and other medical supplies from countries like India, where the virus is surging. Its export growth has been led in particular by demand in the US, as it continues its recovery on the back of vast government spending. China's politically contentious trade surplus with the US widened by over 33% in April.
The Chinese are eating our lunch. They're eating our lunch economically. They're investing hundreds of billions of dollars in research and development. That's why right now, if it keeps going the way, they're going to own the electric car market in the world. We got to compete. We got to compete.
Biden, who has by and large maintained America's tough stance on China since coming to power, is pushing his $2.3 trillion infrastructure plan, a large chunk of which will go into investing in green innovation and technology.
Now, in making a renewed push for his infrastructure spending plan, President Biden said that he believed it could be funded through raising the US corporate tax rate to between 25 and 28% from the current 21%, a somewhat lower target than initially announced. And as we heard in that report, the prices of key commodities have been on the rise. This Friday, copper and iron ore prices hit record highs on rising demand. On the stock markets, European shares hovered around record high levels, with London's FTSE 100 breaching the 7,100 mark for the first time since February of last year. Shares of Germany's BMW is up almost 2% after it posted stronger than expected profits for the first 3 months of this year, boosted by sales in China, which nearly doubled in the quarter.
Now, the stock market, Yuka, it's been booming even as the real economy struggles to recover. How's that?
Well, that rally really has in part been fueled by very low interest rates and cash injections from governments and central banks. Now, the US Federal Reserve is warning that the US financial system remains vulnerable due to a rising appetite for risk, and that investors could see their assets suddenly shrink in value if stock prices crash. The past few months have seen the values of cryptocurrencies skyrocket and shares of GameStop rise exponentially. Top global banks suffered more than $10 billion in losses stemming from the collapse of Archegos Capital Management, a hedge fund. There's increasing talk about a possible bubble. The Fed's chairman recently said that he saw smaller bubbles, in the equities markets.
Now, the parent company of British Airways, IAG, remains cautious, Yuka, forecasting only a minimal pickup in capacity to 25% the current quarter through June.
That's right. Well, IAG, the parent company of British Airways, is indeed remaining cautious after it reported a massive loss in the first quarter of this year. The company said that it lost 1.14 billion euros for the first 3 months of the year, with its airlines operating at 20% capacity. Air France-KLM on Thursday also said that it lost 1.5 billion euros in the same period, with the revenues down 57% from a year earlier. Britain, meanwhile, is publishing a green list of places where people can travel from the 17th of May without the need to quarantine themselves upon their return home.
Okay, thanks for that update, Yuka. And that brings us to the end of this half hour of news. Thanks for watching.